morning and welcome to our first session of the Go-To webinar series, Level 1, the Introduction to Auditing. Right, so this morning's session will carry on from just about now until 12 o'clock. We will take regular breaks, don't worry. And we are going to start with our introduction to auditing and then end off also looking at the methodology. So we will look at the agenda just now. I want to just reiterate that we have two levels of the course this year. So this is level 1 for this year, where we are going to do very similar topics to last year. So if you did attend the Get Ahead 2024, some of the information may sound familiar. We have, of course, swapped the order around a little bit, and we've also introduced the e-learning. We will talk a little bit about the e-learning later on as well. But if you did attend Get Ahead 2024 sessions last year, the audit topics, and you're thinking, sure, I really don't want to listen to this again, I will forgive you. You are then most welcome to join level 2. Now, audit level 2 is where we are going to move on to the methodology and specifically planning of the audit. So there are 5 sessions to do the planning of the audit, where we are going to take you through, and even 5 sessions is really short in terms of everything that needs to be considered when doing the planning. So you are welcome to join audit level 2 if you have already done some audits. If you are doing planning of audits, that is kicking off today as well. That will kick off at 1 o'clock today. All right, so you might also have received your emails for those. I know lots of people register for both sessions. It really is not our intention that you have to attend all of them. It's going to be a lot of sessions to attend both level 1 and level 2. But yeah, so today is level 1 and level 2 will kick off at 1 o'clock today. That's the only afternoon session. After that, we will have some Friday sessions. Right, so that's just to get started off if you are unsure whether you are in the correct session or not. In terms of today's session, what do we have in store for you? Now, first of all, the agenda, we're going to use a lot of polls to keep the session interactive and also to get some feedback from your side. So the way that the sessions were structured this round are that you were registered to e-learning modules, and we'll talk a little bit more about them just now. But essentially, the e-learning module is the recording of last year's session, where we go into detail about the introduction to the methodology. There is a fantastic session about the attendance of the inventory count, and I can brag about how fantastic it is because Helen Miller rather. Helen wrote that module, or most of the material, and she also facilitated that session with us with lots of war stories about where things can go wrong or what to look out for in those inventory count attendance sessions. So with it being the 24th today, you've probably got about 2 weeks before you're going to attend your stock counts. And if you've never attended a stock count, or if you have attended stock counts and you've really struggled in the past, I definitely suggest that you attend that session, prioritize that one before you go on your first stock count. I would even say a few days before the time, because there are also tips for what to do before you attend the actual stock count, how to make contact with the client, etc. So those sessions are already pre-recorded on the Moodle platform, so on the Caseware Academy, and you can go and watch them in your own time. There's a third one also that links to today's session about conclusions on the audit work programs, and those 3 sessions are then basically almost as pre-course work for today's session. Now, we're going to look at who has had the chance to complete it. If you haven't had the chance to complete it, or you missed the email for that, please don't worry and think, oh, this is the end. Now you can just as well go and finish your work for the day because you haven't done the pre-course work. Please, that's not the case at all. Okay, I have scheduled today's session to say if you have watched it, you're going to get value from today's session, and if you have not yet watched it, you're going to get some highlights and hopefully be intrigued then to go and watch those recordings so that you can get the full content and the full value of the session. This is also the way that we are going to schedule the next sessions. So we will look later on in terms of what topics are dealt with. But before our next session, which I think is scheduled for the 7th of March. Yes, that's what I see on the calendar. On the 7th of March, we have the next session. And is it now the 7th? I think it's the 7th of March. I'm getting confused now, but I've got a slide on it later on. So for our next session, which is in about a month's time, you have another 2 I think 3 recordings to listen to. So that's where we will then go through some material, and then in the month's time in our live session, we're going to again do a highlight, do some exercises, check in, make sure and address any of the questions that you will that you have based on the material from that. All right. So that's the way that we're going to go through this. I really want to encourage you to do the pre-course or do the online, the e-learning modules. Don't just come and attend the live session. Yes, you will get value from it, but this course was developed for you to attend both the online in your time in between the sessions, and then of course the live session. Right. I want to address a question that I see. Sia, I see Tumai, you are saying you don't have the latest version of Caseware installed, you can't open the file in the course material. For today, that is not a problem, because in today's session specifically, we're actually not going to work in the documents itself or in the product, in the software. We're going to do the introduction, we're going to talk stock counts, things like that. But for next week, you definitely need to get the latest version of Caseware installed. All right. To use the 2024 file, I see that's a suggestion. I wouldn't recommend that. Remember, the templates have been updated and there have been changes. So I would rather recommend that you get your software sorted out by the time that you will be attending the next, well, never mind, before we attend the next session. I would rather get it sorted while or before you are completing the online modules, specifically with preparation for next time. Even the introduction session, the first recording that we are doing, we're working in the case view, document manager, etc. So I would rather suggest that you use the latest Caseware file, the latest engagement file, because of the templates, because of the software functionality. All right, so make sure that you have the correct templates installed. If you don't have that installed, then make sure that you speak to your manager or get hold of the support at Caseware to help you to install the latest software. Right, that's one then done. Good. Points from content covered is what we're going to start with next, to just check where are we, just check in with a few of the things that I thought are maybe a little bit more topical, more important for us to discuss. Then we're going to work towards what's to come, and specifically in terms of some theory, some things that you can look out for, and do an exercise in preparation of the upcoming session. So that's nice. And then lastly, we're going to have a recap of the methodologies. You would have seen we've got one combined session today for all the audit teams, whether you are using the Probe methodology or whether you are using the Audit International methodology. All of you are joining us in this one group today, and that's fantastic for me. So then towards the end, maybe the last 45 to 30 minutes, we will then break out into two separate rooms where Samu is going to take us through the Audit International, and I will take us through the Probe audit methodology, specifically focused at the junior, inexperienced audit team member in terms of an introduction to the methodology. So again, I want to highlight, if you are and have been doing audits and you want to know more about how to plan for an audit, how do I go about planning the audit, you've got very specific questions, please take some time to attend the audit session, audit level 2 sessions. You are also welcome to send us questions along with your, or send us emails with your questions, or even submit them here. You can even say a question for the session, and then we can address them in those sessions as necessary. Right. Right, so that's the agenda for today. So we are then going to kick off with a poll. Now I'm going to just switch off my camera, because with the polls and all the movements on the slides, I do know that your data sometimes gets a little bit disrupted with all the movement, all the data that needs to synchronize. I'm rather going to switch off my camera, and then I know you are just looking at the screen and my image is not disrupting the sound qualities very specifically. Good. So let's start then with a poll. Right, so our first poll that I want to launch for us starts with how far with the material, how far are you with the material that had to be covered on the e-learning module up to this point, and specifically then the sessions Introduction to Audit, Inventory Counts, and the Work Program Conclusion. So let me launch that poll. Launch the poll, and you then have an opportunity to participate, to tell us how far are you with this with the material. Right, so we can see now that, thank you for the 80% contribution. So I can see that a few people have managed to complete the material, everything that I needed to do. That's a lot, actually. I mean, 29 people. So thank you very much. That's fantastic. I do see that some people are saying almost there. That's almost 100 of you are almost there with your pre-course. And then there's a lot that said you haven't started yet. And that is also entirely understandable. Let me quickly show you, let me see where we're going to start. So in terms of material to download, I'm going to quickly show you that. Just to show you where to get the material. So someone was talking about the caseware file that they can't access. Where do I get that? So the learner resources that you need for the session, for the series, is on the Success community, right? And you would have received a link to this in the email as well. I'm just going to show you how to find it yourself, but you would have received an email. I think it went out on Wednesday also. If you missed an earlier one, it was the same page where you also registered for the webinar. So if I go to this and I'm not sure where to go, I just go to the Success community, success.casewareafrica.com, and I say get ahead. That's all I type in, and I get to the webinar training series for Get Ahead. Right, I click on that and the article opens. Good. Then I will see, if I just scroll down a little bit, right at the top you have a list of all the content that's on this page. And the first one is learner resources. Now, of course, the nice thing is you can also see it here. So the information, the material that is included in here is the material that you would have needed, almost want to say, before joining today's session. And specifically for audit level 1, that would have been relevant for your pre-course work where you were working through the caseware file and looking at the recording. So again, please, if you haven't done it yet, not a problem. Now you know for the future where to find it. So if my firm uses Audit International, I will download the Audit Level 1 Audit International file. What is included in this? Let me quickly download it for you, then I can show you as well. Right. The next link is the Probe Audit Premium Plus. That's Audit Level 1. So again, if I'm attending today, but my firm uses Probe Audit Premium, that's the folder that I will download. For the Audit Level 2, I've got an Audit International, a Probe Premium one as well. Right. So if I then just quickly show you the folder, I've just downloaded the one for Audit International, but it's pretty much the same for Audit Level 1 and Audit Level, for Audit International, as well as for Probe. So when I download this, I will get 4 folders within that, 4 subfolders within that folder. The first one is my caseware file, right? That's the one that we're going to especially work in later on. And then we've got the 3 delegate material folders, 1 folder for each of these sessions that we are going to have live sessions for. And then when you go in there, you will have all the material that's dealt with in the recordings. Right. So I got a question here that says, what did I search for on the caseware community page? I literally just searched for Get Ahead or Get Ahead 2025. Right, I see Verdine's also sharing the link to the Success community. Thank you, Verdine. So if you want to follow that, that's also easier. Then you can follow the link. So that's where we're going to get that information. Right, so that's the one place where you can download the material. For today's handouts that we're going to use is in the handouts tab. So I saw there a question to say, is something in the handouts tab? There are 5 items in the handouts tab. So those are the 5 things that we're going to use today. I'm going to just actually literally share a screenshot with you. There you can see my screenshot. So I went to materials, and there are the 5 items that I can download. We will use the 4 handouts at the bottom later on, and the top one you can see is just the slides. So the D is always for delegates for you guys. The other 4 we will use later on. So that's what we're going to use later on in the session today. This is all you will really need for today's session, right? So if you haven't downloaded the material in Learner Resources on the Success, don't worry, we will get to that. You can do that after the session. That is perfectly fine. All right. Then also, just if you want to know where are the recordings going to be, yes, they are going to be on the YouTube channel, but they are also, again, on the Get Ahead page. So our intention is to have one page where you can come to every time you need something, right? So if I click on Get Ahead recordings, you can see last week's kickoff session is already on there, and you can already go and watch if you want to watch it again, or if you missed it, you can already go and watch last week's session. So it's literally just down from where we had the page itself. Okay, so everything that you might need is on this page. If you want to just quickly download the material for this morning's session, you can do so in the materials page. Right, let me quickly check what do I still need to do, or which questions do I still need to address? So we've good. What's the difference between Probe and Audit International? That is a very good question. Thank you so much. So those are both audit methodologies that run on Caseware. So Caseware Working Papers is the software that you use. Now the methodologies are almost like, wouldn't really say templates, but did say for the moment templates. And the methodologies, therefore, are the ones that we can use to create our working papers with. It's also, the methodology is the way that we interpret and apply the standards. So firms typically have one or the other that they use for the methodology. So some firms use the Probe Audit methodology and some firms use the Audit International methodology. Right, so it really just depends on which templates your firm or which methodology your firm has, and then that will determine which one you're going to focus on in your training. At the same time, also, if I just quickly go to, actually want to go Caseware Learning. This is the e-learning platform. So let me also just show you that. You would have received an email from the e-learning platform to tell you that you have access to the material. Now, the first thing that you have access to is Get Ahead Audit Level 1 if you are registered for Audit Level 1. And then if you did register for working papers, you will also be registered for Caseware Working Papers Level 1. Right, I'm not going to talk about Caseware Working Papers today. I want to show you the Get Ahead Audit Level 1 material, just so that we're all on the same page, everyone understands what this involves. So you will see then that I wrote there to say this course is tailored for new audit recruits who have limited to no experience in audit engagements. You are only required to do either Audit International or Audit Premium, Probe Audit Premium. You do not have to do both of those courses. Again, to come back to the question about the methodology, you will do one or the other of these methodologies. So if you do the Audit International course, or if you do the Probe Audit Premium course, what is included in here? You will see in the structure of the course here, it says Module 1 includes the pre-course work for today's session. Module 2 includes the pre-course work for the next session. Yes, you see there, 7th of March. And Module 3 includes the pre-course work for our last session on the 11th of April. So quite easy. You'll go into your methodology. I'm going to choose Probe Audit Premium for now. And in there then, again, it tells me exactly the same thing. Module 1, pre-course work. And if I go into that pre-course work, then I have my videos there to work through as we need to complete the material. And once I've done the material, I have a quiz, and the same for each of the sessions. Okay. I see there's another. Is there any practical practice on the Caseware platform? Yes, we will not do practice in the Caseware platform today, but we will in the future sessions. We're going to work in that Caseware file that is actually included as part of the download of the material. So when we looked at the materials earlier, let me go to the materials again. In that learner resources, you have a Caseware file downloaded there, either on a Probe Audit Premium Caseware file where we will do the practice for that, or on the Audit International methodology where we will do the practice for that. Right, so there is practical practice on the Caseware working paper, so not on the platform, the cloud platform. Not sure if you're talking cloud platform. Maybe just go back to last week's session where they did explain exactly how you can get instruction or what the session involves for Caseware Cloud. There is something about cloud, but I cannot off the top of my head remember that cloud thing now. Maybe if I can allocate or just ask, maybe someone, can you just maybe remind me again as to, or help Ebenezer just to see how, what will the work be for Caseware Cloud, if that's perhaps the question there. All right, I think from what I can see now, we've got the majority of the questions answered. Someone's asking me, how do I know if I'm registered for Audit Probe or Audit International? All right, that is a tricky question because I see that you are from a firm that probably uses your own audit methodology. So you are going to have to ask your manager which one of these two courses you need to attend or participate in, because I'm really not sure which methodology you're going to have to watch or listen to. For today's session, maybe it's just easiest to stay in the session when we do break out. It's really just going to be the last bit. But if you're unsure, maybe quickly ask your manager which methodology you use so that you will know for the breakout session or then also for the online material and for the future. Right. Good. I think I have now answered the majority of the questions, at least the pressing questions, before we get started. Okay. Right. Good. I want to just see that I haven't missed anything. Right. Good. Then we are moving on back to our polls and our material and all of that. Good. So whether you've completed the material or not, that is perfectly fine. We are going to just quickly review a few of the points covered so far in the recordings and in the pre-course work. So the first question for you. The level of assurance or the level of comfort that an audit provides, what is that level? Is it reasonable assurance? Is it 100% guarantee that there are no misstatements in the financials? Or is it limited assurance? Which one is the correct answer in your opinion? What level of assurance or comfort does an audit provide? Right, well done. Either you have studied your auditing or you have already completed the online learning. We have a lot more correct answers than those that have completed the online learning. So I'm trusting your studies were the important part. So well done. Yes, an audit provides reasonable assurance. Definitely not absolute guarantee, absolute assurance. And it's better than limited assurance. Limited assurance, of course, is the... Limited assurance is the type of assurance that we get from something like an independent review. Right, so that is the assurance question. Next up then, if we go to the next poll, when a risk is raised during the planning stage or as part of auditing, what do we do? I have a discussion and do some audit work, and that's good enough. I have a discussion, there's a requirement for a system description and audit work to address the risk, or I go into complete panic and audit this account to death. Which is the right option? Endless auditing, to just have a discussion with the client and carry on, or do I go into complete panic and just start auditing until the end of days? All right, so what do we see? Yes, we must have a discussion with the client, maybe even have a discussion with the team or with the manager to check that we really understand this and that it actually is a risk. And then please don't go into a panic. Please don't go and complete every single procedure on the work program. You will also know that in the past, we might have done a lot of work just because we always do work on material balances. But both the ISA 315 revised that changed in 2019, that's when the standard was approved, there it really said we only have to respond to the risks that we've identified, or let's say it was made more clear in the revised standard. So yes, it is the middle one that we have 86% of the respondents had voted to that. So you'll have your discussion. You must have a system description, so document your understanding of the information flow of how those transactions or account balances landed in the trial balance or in the general ledger then, so that you can then from there make sure that you understand how things happened. If you need to or want to, there's no requirement to have to identify controls. There's no requirement to have to test controls, but the requirement is there to have a system description. All right, so that's the general one. When you have a risk, you must document a system description. Yes, there are other requirements for when you must consider controls, like, for example, where you identify a significant risk, you must identify if there is a mitigating control. But in general, the with let's call it with just the normal risk, if that's a way to mention it, with a risk, you just have to consider the system. So here's a nice slide. The audit flow that is required for a the audit flow that is required when you raise a risk. So in the yellow block, I think my read pen is still active. So when I identify a risk and I record it, or I raise the risk, as we like to say, then I have identified a relevant assertion. The relevant assertion is defined as the assertion for which I have identified a risk of material misstatement. The account balance or class of transaction will then be considered a significant class of transaction, account balance, or disclosure, and the standard requires us to then have a system description documented for that. And then we will go and do field work to address the specific risks raised. Right. In deciding the system description, what is it that I need to get? How do I go about that? Well, generally, as you can see in the little white side, generally we go and we consider how did this item end up in the, well, ultimately financial statements, but in the general ledger. So there would have been actions taken. Let's say, for example, purchase of products, an employee works for us, whatever the case may be. That then leads to source documents, which is recorded either in the sub-ledgers or in journals, any other way. And then we get to the general ledger, trial balance, other balances, and financial statements. So this is the system description that you need to document when you identify a risk raised. All right. I see there's another question that's come in, so let me just quickly have a look at that. Okay. I can't seem to see that. I do see one question that I'll address in the tea break, which will be soonish. So just be patient if you do feel that I'm not addressing your question. I see it is there, and I'll address it just now. Let's have a look at another poll, so that we can just cover the points that's been addressed. So from your side, which assertion is applicable or relevant if I am concerned or worried that an account contains transactions which did not happen, or they are fake, they actually didn't happen at all, yet there is a recording of that in the accounting record? So is it the completeness assertion, the occurrence assertion, or the accuracy assertion? So let's kind of have a look. Let me know which of those assertions is applicable. Right, I've got 60% of people that's voted, so let me know which assertion is applicable if I'm worried that an account contains transactions which did not happen, they are fake. I can possibly even say those transactions do not relate to the client. An example, maybe, war story for you, is you're auditing a client, they've got their business account, and they have a landline or an account expense for a landline in Hermanus. Now, if you know where Hermanus is, I've got a colleague who always jokes. He's from Johannesburg, and he always jokes and says he doesn't know if Hermanus exists. It does. It's a lovely place in the Western Cape. There are a lot of whales that you can watch there. So if they have a landline in Hermanus, but your client is based where you are, Cape Town, Joburg, Bloem, wherever you are, that's where your client's business is. Now, my question is, does that transaction relate to the business? Does it? Well, if you ask the client what business is done in Hermanus, and the guy responds and he says, well, you see, that is my holiday house. Is that transaction something that happened? Is it fake? Does it relate to the business? Which assertion is relevant in that case? Okay, I've got a person who asks, is occurrence the same as validity? So validity, in terms of a question, validity is a control objective. It is linked to occurrence as an assertion, but occurrence is an assertion while validity is a control objective. But if something is valid, it obviously then, or not obviously, it most of the time, or often, that's the word I'm looking for, often, then means that that transaction did occur. All right, let's see, what did everyone vote? Thank you. I've got 81% of people that voted. So which assertion is applicable? Well, yes, occurrence. So occurrence in the standard is also defined as it did take place and it relates to the business. So that holiday house in Hermanus, telephone account, or maybe today it's not the telephone account anymore, it's maybe the Wi-Fi account or something like that, that is not a business expense, and so therefore cannot be part of the business expenses in the income statement. That's a personal expense, must go to the loan account. All right, good, thank you. Next up then, the assertion that is applicable when I'm worried that transactions are not recorded in the correct period, which is the assertion when I'm concerned that transactions are not recorded in the correct period. All right, so what do these three assertions mean? Valuation means that the accounting or the records is at the correct value. Now, very important here, valuation is for subsequent event recording. So if you think about IFRS and IFRS 4 standards, they have recognition and measurement, and then measurement, initial measurement and subsequent measurement. When you initially record the vehicle that you buy, that's initial measurement, or the expense that you incur, that's initial measurement when you record it the first time. And then subsequent measurement, well, your expense generally doesn't change because of that, but your balances in the balance sheet, your assets and liabilities and equity, those values may change depending on the requirements of the subsequent recognition requirements. So that's valuation, if your items are reflected at the correct subsequent measurement value, essentially. Occurrence, did it happen or does it relate to the business? And cutoff is it recorded in the correct period? Yes, of course. If a transaction is recorded in the incorrect period, let's say we recorded it in our financial year, but it actually only happened in the next year, then we have a transaction in the current year which didn't take place this year. So there is a record that shouldn't be in the accounting records. But the error is not because it did not happen at all. The error is that it was recorded in the wrong period. So that is your cutoff assertion rather than your occurrence. And valuation, because that is your balance sheet at year end, subsequent measurement, that would not relate to the initial recognition, which is when the transaction is initially recorded. All right, so sounds very academic. Have a look at ISA 500 if you want, or otherwise listen to the first session's recording where we address the assertions and the definitions of those assertions. They actually are, probably sound very geeky now. I really enjoy looking at the assertions, the definitions of assertions, because they actually just make it very clear for us. I always say, if you have never studied the standards, you've never read them, do yourself a favor, go have a look at those standards. They actually make a lot of sense. And I know, at Varsity, you just want to, get through the stuff and you're not actually opening that book. Yeah, you have to buy the book, but you don't actually read it. That book has a lot of valuable information. So if you haven't read it yet, go and have a look at ISA 500. Right, then, when is an inventory count required in terms of the auditing standards? So is it always required? Oh, sorry, not always required. Is it always a choice? So you are never required to do the inventory count or attend the inventory count by the client? Or is it required when inventory is material? And last option is only when we raise a risk on inventory related to the existence of inventory. So only when we think, oh my goodness, maybe they are showing more inventory on their balance sheet than what they actually have, only then do we need to go and attend the stock count to actually check that the stuff's there. Is it when the inventory is material, or do we always have that option to choose the inventory? All right, so let me launch that poll for you. And then you can respond. Let me know, when are we required to attend the stock count by the client? And of course, with this, it could be any time of year, but mostly we are focused on the year-end stock count. Right, so we've got, it's always a choice to attend the inventory count, so it's never required. All right, that is not quite the case. The majority, 61%, is correct. When inventory is material, we must attend the stock count. So even if there's no risk related to inventory, even if there's no risk related to existence or valuation, if you want to be concerned about whether the stock might be obsolete, anything like that, even then, if the balance of inventory is material, the standards say you must attend the inventory count. All right, let's also just have a look at the slide that I've got there for you to go with that. Whenever inventory is material to the financial statements, ISA 501 requires us to confirm existence and condition. Condition, of course, with regards to valuation and allocation. Right. I'll have a question here about inventory count. So let's have a look at that one. Can you do an inventory count on a sample of locations if the balance of inventory is material? The good news, I hope it's good news for you, is yes, you can. So when the balance of inventory is material and you have, I think the example we had earlier on is 20 locations. The question changed slightly, so I can't see that one again. But I think it was 20 locations or 3 locations or 5 or whatever. Yes, you can only select a few. Now, the word sample, of course, is also, I almost want to say, a dangerous word. So yes, you can specifically select which venues, which locations you are going to go and audit. You can either do a real proper sample, or you can analyze your locations and based on risk, based on understanding the business, decide which ones are relevant. In the case of auditing, let's say a large retailer with shops in every single town, and I'm sure you can all imagine one now for yourself, whatever retailer, yes, the auditor cannot possibly attend all the stock counts every single year. So they will have a selection, and they'll probably have bigger warehouses where they will always go, and then they will rotate the other warehouses, other shops, and go and attend a sample, a selection of those guys every year, every third, fourth, fifth, whatever year they will go to this to another one. Not to another one, they will only go to a specific one every, let's say, fifth year. Maybe they've got so many that you just cannot possibly attend all of them, and that's then also the case, and you will still rotate. To give you an example, one instance that we had many years ago was, it was a new client, and for the first year, they had a December year end. For the first year, we actually had a stock count. I think we were appointed the auditors on the 15th of December, and they've got a December year end. So we had to very quickly decide where we were going to go and do the counts. So they had, I almost want to say, classic type of branches. They had a warehouse and branch in Johannesburg somewhere. They had one in Cape Town, and they had one in Durban. If you look at the balance sheet, the balances for these different branches, you had the majority of the stock being in Johannesburg and Cape Town, which was by far more than the teeny tiny branch in Durban on the paper, if you look at the values. In year 2, what we realized, so obviously, firstly, year 1, as you can imagine, bigger balances, we go and do the stock count or attend the stock count for the client in Joburg, Cape Town. What do we realize in year 2? Hang on, they import all their material. Everything gets imported, and where does it come through? Durban Harbour. So what we then went to go do is actually attend the stock count in Durban Harbour, not because the value of the inventory was material, but because of other instances, other matters that we wanted to look at. So the main office, the head office, was sitting in Cape Town, the auditors were sitting in Cape Town. So it was really important actually for us to go and have a look around in the Durban office or branch or whatever you want to call it, to really go and see what the process was like. How did they actually organize the inventory? How did they count the inventory there? Did they count all the inventory, or did they maybe have I almost want to say branch where they actually, or warehouse or room or something where they did not include stuff, or maybe they had goods that were already sold to customers and they accidentally still included that. So all of the war stories that we've got from our inventory count attendance session, that one was a classic example again to say you have to understand your client before you can really decide what would be the right places to go and select for the stock count attendance. So I hope that helps to my. Otherwise, just ask another question if there is something. All right, so I think we have done enough work now to earn another cup of coffee and a comfort break. Right, ladies and gentlemen, let's continue. So I hope you had a good break and you've got a fresh cup of coffee. If you needed a snack, that too. Right. I've got 2 questions that came in during the break, and I would like to address those 2 questions. The first one is, if the entity under audit that we audit, if that entity's main business is in the service industry, in other words, they're not buying and selling inventory items, but they have consumable items that they use in their service industry that are above the materiality, in other words, is material. Does that qualify that the inventory is material? And if we didn't count that, is that enough cause to qualify the opinion? So that is a short question with a long answer. So the shortened answer is, you should ideally have counted that at your end. If you have not counted that at your end, the standard always goes and says, how can you get the audit evidence that you did not have at year end at this point in time. So, for example, the standard also makes provision for the fact that you can count after year end and then don't do a rollback to year end. So you will do a lot more work to confirm that the inventory or the consumables on hand at the time of the audit, plus the items that have been used minus the items that have been bought since year end, does actually equate to the inventory held at year end. So you can imagine that whole roll forward is a massive, massive task to administer. So yes, you'll have a lot of audit work to do, but that is another way then to achieve the same objective. Of course, if it was used, then it would have probably also been in a good enough condition. So hopefully not the end of the world. All right, so that is the short answer to it. If you cannot get sufficient appropriate audit evidence about the existence and the valuation allocation of inventory at year end, then you have no other option but to qualify for those elements. So I'm not saying yes, you must qualify. I'm saying if there is no other way in which you can get sufficient appropriate audit evidence, then in that case, you would have to consider how to modify your audit opinion, which could very well be a qualification. The other question I have is, we've spoken about existence and conditions of the inventory, and so therefore the valuation, allocation, existence assertions. But what about the completeness assertion, and specifically of the locations where the inventory items are? So how do you verify that you know of all the locations where stock is held, in addition to the discussions with management? So just asking management, this person saying, I want to actually know better. I want to have a better confirmation that I've included all the locations. Now, firstly, let me say, I really, really hope that this is not because you mistrust management, because hopefully you do trust management and their responses, and that their responses are reliable. Secondly, if you want to just corroborate that, it really is a combination and almost want to say a high-level overview of the matter. So, for example, you will also consider where the client has, let's say, warehouses, businesses, buildings, things like that they either own themselves or that they rent. Deliveries made to and from locations. So let's say they are renting one warehouse in Johannesburg, they own a warehouse in Cape Town, but there are often couriers sent somewhere in the Northern Cape, in Uppington or somewhere. Okay, like repeatedly couriers are sent there, or repeatedly couriers are sent from Cape Town to Uppington, and then also from Joburg to Uppington, or something like that, and you start to see a trend about this Uppington location, then you might think, but why is that the case? All right, so that could be indicating, I would imagine, if a client forgot or really did not indicate a specific warehouse or something, you'll probably pick it up through the property that's held, the property that's rented, things like that. And then if they really are trying to hide inventory, if they really are trying to commit fraud by not showing or not telling you about locations, if that's what you are concerned about, bear in mind that fraud, most of the time in those cases, have collusion. So you'll have people working together to hide that from you. Again, I come back to your considerations around fraud, about additional work required for fraud, about hopefully you can trust the client in their responses, but you will consider the variety of other items also to see if they are perhaps the same way that we also look at bank accounts to see if all bank accounts are recorded. And that's one of the discussion points for the next session of how we confirm completeness of bank accounts, because the client's going to tell you they've recorded all bank accounts, and the same with the locations. So where are items delivered to clients from? Where are items received when they are received? When you look at your purchase invoices from suppliers, where does that stock go to? What is the address on the invoice? I've mentioned the locations that are rented or owned. All of those kind of things will help you to hopefully identify if there really is something that is left out in error. If it is left out with the intention of fraud, then you'll probably have to pick it up in some other way. And then also I'm thinking, like, if they are, let's say they are really, selling that inventory in the other weird location off-site, those sales would come in. If they're not even recording those sales, well, then you're really sitting with a massive collusion, massive fraud situation, which one person by themselves can't actually pick up. All right, so I'm trusting that addresses the question about the locations, a combination of points to consider in order to get to that. All right, then I've got a slide to discuss questions and top tips. So questions for you, and you can, if you want to, you can just submit points in the questions tab if you want to participate, or otherwise maybe just think to yourself. Things like, can the client change the count instructions? This is a question we often get, is whether the client can change the count instructions on the day of the count, or whether we must just include a management report item at the end of the audit to say, listen, your count instructions weren't ideal. Next time, please change the count instructions. Well, it is better, more ideal, to change the count instructions at that point in time. If you see the count instructions before the session and you realize there's a problem and you want to change it, well, then you can do that right there and then and discuss it with the manager, the person in charge of the stock, and say, actually, really, ideally, this should be the case, that should be the case. Of course, you can't get there after everything's been counted and then they need to redo it. Okay? They're not going to do that for you. But if you are communicating early on and they are able to change it, they can change it for you. It is obviously better, because then you can actually rely or have better reliance on the count procedures, rather than you going through the whole audit and at the end of the audit you give this management report to management to say, oh, by the way, 6 months ago when we attended the stock count, we noticed that you could improve X, Y, Z and the other thing. Maybe next time consider changing that. Okay, I don't think the client's going to be too happy with you. So that's definitely the more ideal situation. Then what happens if there are no stickers used to mark the stock that has been counted? So we learn in theory that we should be using stickers or something. The client should mark everything with a sticker once it's been counted. But what if they don't? Well, do they have some other kind of order for that? So it's quite possible that they are saying, well, we're not going to put stickers on everything, but we're going to start from this one end and we're going to go up the row, down the row, up the row, down the row. And actually, there's just no way to actually then miss anything or to double count anything, because we're going to go systematically. So then that could possibly also address the same objective. Is it imperative that I stay until the end of the audit? Well, I guess it's the ideal. But with February year ends, we also know that often you have a lot of stock counts to attend. So first prize, stay until you know all the differences have been agreed. So if the client still needs to, after the count, check, we always learn that the count sheets also should ideally not have the numbers per the accounting record. So we'll have, let's say, pens and rulers in the stationery shop, and the records will show there's 5,000 pens and 200 rulers. Once they've counted it, make sure that they agree that to the system and know that there's 5,000 pens and 200 rulers. If they have a difference in the, let's say, hopefully the rulers and not the pens, and they see that the records show there should be 205 rulers, well, then you are still there to count with them. If they've realized that problem later on, when you already moved on, either to the next stock count or you're already home, typing up your working paper or doing whatever it is, then you can't necessarily always go back and say, hang on, let me count that with you and make sure that I also see 205 or 5,050 or whatever the case may be. So if you want to start typing up your working papers, always ask, is there somewhere where I can start doing my documentation so long while you are tying up the numbers? And then you can just call me if there is a problem that I need to attend. Right. Lastly, remember our attendance at the inventory count is not just to do the test counting itself. We are also observing the controls in action. And that's also why I said that ideally you don't want to get there right at the end, because then it's already been done. Ideally you don't want to leave too early, because then you might still miss some of the matters. All right, next up, a poll. We are almost done with a recap of the other sessions. So let's see, what should we do if inventory items are measured in weight? So what is it that we need to do? Do we need to believe, just trust in the process, believe that the client will have counted it correctly, weighed it correctly, because it is their inventory, they have all the experience and they would have done it properly? Would you test the weighing equipment to ensure that it is a reliable test, or will you estimate how much those items weigh? Have a look there, vote for us. Right, so nobody says we must just believe the client because they have all the experience. Of course, we want to, well, there was one person that voted that, but they were by far in the minority. Then testing the weighing equipment to ensure it's reliable. 92% of you say that's what we have to do. And then lastly, we can estimate how much it weighs. Well, it depends on what it is that you are weighing, and that might be difficult for us to estimate. So yes, preferably you should test the weighing equipment to ensure that it is reliable. I remember one year the client came to me and said, oh my goodness, the forklift that we used to lift the items to put it on the weighing equipment is now run out of gas. So unfortunately, we won't be able to help you to weigh the items for yourself, to see with your own eyes how much it weighs. But we have counted it. We have weighed it when we were doing the count. So you'll just have to trust us. Well, yes, I'll wait until you get some more gas. It can't be too difficult. And then we will have a look at that. Okay, of course, that was also Friday afternoon. No one was in the mood for that. And I know everybody says Kaapstad is slaapstad, but we do still work. We do still do what we need to. So we didn't go and have our early drinks, Friday afternoon drinks too early on. We waited so that we could weigh those items, make sure that the equipment was appropriate, etc. Of course, you won't always bring your own scale or anything like that, or your own expert to make sure. It is also possible that they are simply going to calibrate the weighing equipment shortly before the count, and then you are going to ask for the certificate to show when last it was calibrated. All right, I've got another interesting question here for you. So let's see. What would be the approach if you are appointed as auditors long after the year end and another auditor or the client had done the stock take at year end? So very important, the client normally does the stock take in any case. Even the other auditor only attends it to do test counts, to check the process and so forth. Right, so as auditor, we are never appointed as the primary counters, if I can call it that way. We are observing the client's process. Right. So if someone else had attended it, you can ask to have access to that person's account information. I have been aware of instances where you then go and ask the predecessor auditor for their materials, for their check, the same way that you would essentially rely on a predecessor auditor's prior year audit working papers so that you don't have to test opening balances. It's pretty much the same thing, but then obviously just with regards to year-end audit material, you will still perform some procedures yourself to confirm that that is reliable. No other auditor is going to give you a copy-paste of that stuff unless you then basically contract them in as a person providing assistance to the auditor. All right, if only the client had done the stock count, what would probably happen, as we had in the other cases, you'll probably count at another point in time and roll back and test all those other rollbacks. Right, so it's basically saying we've got February year end coming up, if we had a 28 February year end 2025 and we're doing the count in, let's say, April 2025, then basically at that time when we are doing the count, let's say you're doing the count on the 25th of April, then you would do the count on the 25th of April, make sure that it reconciles to the records as at the 25th of April. And then you will go and look at the records to see what was in stock in February, according to the records, how much inventory was added, how much inventory bought, sold, or manufactured, and whatever other movements you had, write-offs, donations, blah, blah, blah. And then you will go and actually audit those inputs. So if they say that they bought 3 million rands worth of inventory with all of these invoices making up that 3 million rand, you'll actually go and audit those invoices and check that they were received and that all the necessary information is there to prove that. That's obviously after your year end, eh? So not just are you going to be auditing your purchases for the February 2025 year end, you're going to audit purchases bought after year end so that you can confirm that they weren't in stock at year end. Right, so yes, definitely preferable to rather have the stock count or attend the stock count at year end, but most of the times we have workarounds when necessary if we weren't able to. Right, thank you for those questions. It really does keep the session alive and kicking when we have all of these. Right, next up then, what is to come? So that is dealing with the theory that we've dealt with in the first 3 sessions. Of course, there's a lot more in the sessions themselves. So please, if you haven't yet, and maybe you've just been intrigued now, go and have a look at the material, go and watch the recordings. There is a lot more detail there. There were 3 different sessions, and the recordings for each of those sessions have been edited and cut down to about 2 hours per session. So that gives you quite a bit of information to absorb in those recordings. So that's up to today's session. Then what are we working towards? So in preparation then for the session of the 7th of March, what are we going to be doing in that session? Well, now we are working towards the field work, performing the field work or the further audit procedures on specific sections. And we've chosen for the first sessions, we've chosen cash and cash equivalents, general expenses or operating expenses if you want, as well as employee costs. So again, in preparation then for the session on the 7th of March, there are 3 sessions recorded for Module 2 for you to watch an example, or not an example, to watch the recording of those. There's a lot of interaction there. There's a lot of work there. Not work as in it's going to take you forever and you need to, but we're doing exercises. We are working through those sections as real fieldwork sections. Right, so go have a look at those. And then once you've worked through those recordings, that's then when you are ready for the next session. So there's a recording, again, there's working papers all included in those folders to download. So you should be able to actually come fully prepared next time and know what's been done there. I really would recommend that you watch the majority of those 3 sessions for the next session so that you know what we have done there. So we are going to do some exercises in the recordings, or there are exercises in the recordings, and then we will leave out some of those potentially to come and do in the session. So if there's a working paper, I remember the employee cost, for example, there were 4 employees where we did something in the recording. We do 2 or 3, and then we will do the remaining 1 or 2 in the live session next time as well. Okay, so please watch the recordings and come prepared for next time's session. All right, but now we're going to first do an exercise. We're going to look at reconciliation, because we want to know, what I want to do in the next bit is to actually just help you to make sure that you are prepared when you go and watch those recordings. So one of the big things in the recordings that you're going to watch for the 7th of March deals with reconciliations. So the reconciliations, what is important for reconciliations is that it's important for us to understand what a reconciliation is, and then how to do the reconciliation. And then in these sessions, we're going to go and audit those reconciliations. So a reconciliation is essentially like a link between 2 accounts, 2 reports, or 2 different amounts, things like that. So in our audit file, we can, for example, have a supplier statement showing a balance and the amount that I actually owe according to my accounting records. I can have a statement from the bank statement, and I can have the actual bank balance in my cash book or my general ledger. I can have the balance according to my general ledger for trade receivables, and I can have the trade receivables ledger. And then we need to see whether those 2 agree. If they don't agree exactly, there's obviously differences. As you can see in the example on the screen now, the supplier statement balance shows 1,000 Rand, but I owe, according to my general ledger, I only owe 800 Rand. So, well, we can all see there's a 200 Rand difference. Now we need to do a reconciliation to find a number, or the numbers that make up the difference, the 200 Rand that we can see currently, so that it makes sense. That's the important thing. We can all see there's a 200 Rand difference, but why is there a 200 Rand difference? And is that correct that there must be a 200 Rand difference? All right. So the recon will then show the difference. And if we go and identify what happened here, we go and analyze the general ledger and the supplier statement. So for some of you, you might have been at school where you did bank reconciliation. So how does a bank reconciliation then work, or how do they teach us that? So what generally happens is that you will have the bank statement, and on the bank statement, there will be transactions, and in your cash book, you would have recorded transactions. So what will then happen is, essentially at school, they would teach us to tick off or scratch out or clear or highlight, or I don't know what you did with each of the transactions that were actually on both of them. So on the bank statement, maybe I had check 1, 2, and 3, and on the cash book, I showed, sorry, now I'm saying check, hey? Shows you my age. So we had payments, EFT payments, 1, 2, and 3. And on the cash book, we showed we had made EFT payments 1, 2, and 3 to the right values. And then we show all those items that are actually on both of them, and are on both items or both documents. We don't have to show them. They are making up the difference between not making up the difference. They are on both of them. But then I might have a deposit on the cash book because I'd already received a proof of payment from the client, but it's not showing in my bank account yet. So my bank statement doesn't show the deposit because it's still just want to say in transit, it's still being processed. Or my bank statement might show deposit, but because the client didn't send me a proof of payment, I didn't know about it, and so I didn't record it in the cash book. So those would be differences that's only on the one or the other, and that's what we want to actually see and explain. Right, so we will identify those differences by examining each of the chains, each of the routes, to see what matches and where are those differences. What are these so-called reconciling items? Good. The principle to do the reconciliations is always to have the same, no matter the recon. We are always showing the two numbers that relate to each other, and we will always go and find the differences. All right. We are going to move towards an exercise now, but I do see a question that still relates to the inventory count. So please just give me a second to just read the question about the inventory count so that we can then just quickly address that question, because I know how it is. Until you've got your question answered, you are still worried about that one, and I don't want you to miss the exercises. So if perhaps you have not yet downloaded your material, please go and download the material now. So this is now in the materials section, right? You'll remember the materials in your GoToWebinar, go to the materials and download at least the bottom 4 parts so that we can do the investment reconciliation and the PPE reconciliation. Good. So now we are going to move on to our exercise, and we're going to perform some reconciliations. I want to really take it slowly. I see a question that asks about what is the name of the document for the exercise. So in the materials, you won't find it in the folder that you downloaded earlier on. The first documents that we're going to do is the fixed asset register one. So for that, in terms of the screenshot, you're going to look at the PPE extract from the fixed asset register and the PPE extract from the general ledger. Those are the two first ones that we're going to reconcile. We will do the investment ones next. Good. So I'm going to also open those documents now. Just give me a second. Okay, we said PPE is first. So hopefully I'm going to teach you something interesting now, even if you might have felt that you have not learned anything interesting up to this point. So the first thing is that I want to teach you is when we open two tabs, two documents, it can be a PDF and your emails, or it can be your caseware document and Excel or anything like that. Then in those cases, we might want to, like here where I've got two documents, you can see I've got two caseware files open. The one is then the extract from the file, and the other one is the fixed asset register. What I want to do is I actually want to say, well, actually, I would like to see both of them. I've got a lot of whiteness here that I'm wasting, and rather than going to select the item each time, that's just time consuming. Let's rather split my screen into two parts so that I can easily see both parts that are relevant. Right. This is especially helpful when I have a when I've got the one screen only, I don't have two screens, then that is quite tricky as well. I just see another person that also said they don't know where to get the material from. So let me just share the screenshot again, show you the screenshot. So in the materials part, on your top right-hand side where you have your questions, you've just submitted your questions, just to the right of that, you've got a little icon that indicates materials. We are now going to work on PPE extract from fixed asset register and PPE extract from general ledger. Those are the first two ones. So you can just go and click and say you would like to download them and select that. Okay. So we're back to these two Excel sheets now that we've downloaded, and I'm saying I don't want to jump between these two and then I forget or I can't remember or whatever the case is. So a trick is to basically split your screen in two. Now, yes, you will probably know about these little blocks on the top right-hand corner where you can make the item smaller, bigger, etc. But that's sometimes time-consuming. If I go and make it smaller and I have to move it around like that, it's not ideal. So what would I rather do? If I have it as the big size, Then I will click on my keyboard. I'm going to go slow, and hopefully that will be helpful. I do also do that in the first recording, so if you miss it, you can also go and watch it, or if you forget. So I click on my Windows button on my keyboard. You know, the button that shows the 4 blocks that looks like Windows. Click on that, and then I will probably want to move this one that's got the detail of the GL. Let's say I will move that to the right-hand side of my screen. So I want to move that to the right-hand half, and then I'll have the fixed asset register on my left. So I'm going to click the Windows button, hold it in, and then using the arrow, press right. And that will move. Oh, I was on the wrong space. Let me just quickly be in the wrong right document. That will move the screen to my right hand side. That Excel sheet where I was in just now, that's moved that. And now it's asking me, you've got all of these other things open. What do you want to put on the left hand side? So I'm going to go find my PPE extract document, which is the third one from in the top on the right hand side. And I will simply click on that screen, which will then say, okay, that's the one you want on the left. And that will then share that. Sorry, I just want to actually make this smaller. Go back to my Excels again to show you my 2 Excel screens. Right. Now I can see both my screens. And now if I feel, okay, but there's very little here on the left-hand side, maybe I want to just make it a little bit bigger on the right-hand side. I literally go to the middle where I can basically select both sides, and I can drag it to the left or drag it to the right. And that will then change the width. Okay, I'm going to drag it slightly more to the middle, and that's that. Okay, so that's quite helpful if you need to, I almost want to say, use one screen for more than one thing. Right, Windows, and then to the left, Windows to the right. I want to change just make sure that the cumulative side is big enough, and now we are ready to go and do the reconciliation. Right, so what we've got here is we've got the cost of the 4 accounts of property, plant, and equipment, and we've got the accumulated depreciation of the 4 categories of property, plant, and equipment. So what we want to do first is we want to have the cost according to the fixed asset register. Let me just make this, put this in the middle, bulk, and I am going to do the GL, the value, if you want, according to the general ledger that we are trying to reconcile it to. Okay. So if I then go to my general ledger extract and I see, well, here we've got the property or the plant and machinery, the cost. I could, if I wanted to, just copy and paste it, probably Control C and Control V. This is amazing. If you don't know your shortcuts yet for Excel, really, that's one of the things you need to learn very quickly early on in your training contract so that you can work faster, right? Not all of us can type fast, and that's fine. That you can move around that, you can work around that, but to know that you can Control C to copy, Control V to paste, Control Y even the other day. I've been using it so long that I forgot about it. But Control Y is if I want to do something a second time. Let's say, for example, I want to make motor vehicles, let's say the line, the word of motor vehicles, I want to underline it. I'll go Control U, which underlines the font, the text. And now, which is U for underline, now I want to do the same thing in office equipment, but because maybe I had to go and click on a few places to do a step, I just go Control Y and it does exactly the same. So if I wanted to, let's say, see, so it's also underlined the office equipment and it did the same thing as what I did just now. That's Control Y. Yes, do the same thing, U underline. So if I want to undo that, maybe you know that one already, Control Z. I don't want to do that anymore. Undo the second one, and that's also undone. So know your shortcuts. Okay, that was my sermon for the day. So now furniture and fittings, we've done that one. Plant and machinery, accumulated depreciation. We can even copy that one, plant and machinery, accumulated depreciation. I'm just going to go through, copy, paste the all of these items. I will just copy, paste. Motor vehicles cost, that is closing balance. 127, there was no changes there, so let's just leave that one for now. 923, oh, I see the motor vehicles, sorry, motor vehicles, there we go. So that's motor vehicles there. I'll just simply copy and paste each of these items. Oh man, you see now, did that? Copy and paste each of these items next to the line item. So you can go ahead and do the same thing. Take your closing balance, right, but make sure you use the right sign. So I choose to use the one in the GL, that negative one, the credit for the item. So I'll take the very last balance, take that and paste it in the example or the extract of the fixed asset register next to the item. So motor vehicles, they're not all in the same order as the GL. The client's fixed asset register is slightly differently, so that's fine. Office equipment, the cost, there we go, office equipment, accumulated depreciation, and we go and we just simply paste them there for now to see. When you look or listen to the recording, you will also see in the recording where we actually have tick marks and things like that, how you can also then make this into a working paper. So that's why we copy the document, the amounts, to be able to then say these items all come from the general ledger. Right, what are we going to do then once we've got these items? So now I've got the cost according to the fixed asset register. I've got the value or the cost, the values according to the general ledger. Now we have reconciling items potentially if we have differences. Right. How will we know if there are differences? Well, if I just look at the top one, there's clearly a difference between 56 million and 57 million. Right, the two are not agreeing. So what I will probably do is I will probably say, well, the value in my general ledger less the value in my cost is going to give me a difference. Right. But I will also probably have the reconciling item later on to see if that one's going to address it. You can also just say everything minus the something like that. Let me just see, why is my values not working? Oh, I was replacing my formula, not adding to my formula. There we go. So there's a 1.3 million rand difference. And I can do the same with all of these items. Do you notice I did the formula once? Then I selected the item by waiting for the arrow or for the mouse to not have the white cross, but the actual little black one. That means now you're going to drag this folder, and I just copy the folder across to the rest of my items. Of course, this one doesn't have a value, so I'll just delete that. But now I've got the formula duplicated or copied everywhere. So now I can see that, well, these items are all fine. There's no reconciling items for them. So I'll probably even, just to make sure I don't forget, I'll just say 0, 0, 0. 0 and 0. But we can clearly see there's an issue with plant and machinery cost and with the accumulated depreciation for furniture and fittings and motor vehicles. Right, we need to now go and do a reconciliation, find the reconciling items. How do I go about that? Well, we don't actually have much information in the fixed asset register at this stage, but I do have the detail of the cost in the general ledger. So let's go and see if we can see anything in there. So in that property, plant and machinery, the cost line item, now this is again where I'm going to just increase the size of my item slightly so that I know you can all see. Okay, so we can see, let me just wait for the slide. Okay. Can you all see clearly this client had completely left out recording the one entry into which they had recorded in the general ledger. They forgot to record it into their fixed asset register. That's making up exactly the 1.3 million. You see, that's making up exactly the 1.3 million. So what we are finding here is that the client obviously bought a new machine, the sharp bag machine, for 1.3 million, but forgot to record it in the plant and machinery item. So let's then just say additions that they didn't record, that's making up the 1.3 million. And obviously my formula was wrong. And now that's addressed it. How do I also know that? Well, sometimes I'll just go and quickly drag it like that. And now have a look. I can actually see at the bottom that the sum there is 57,349. And that is also what we have as the value up here. So that's why I also know my formula is correct now. Right. Good. So I have now one reconciling item. What do I do with this? Well, I don't just leave it on my working paper and carry on. I actually have to tell the client, listen, your fixed asset register is not 100% up to date. Will you please go and update it so that we can know that next year you're actually going to calculate the depreciation correctly on this. Right. Good. Interestingly enough, I have actually recorded the accumulated depreciation on this item correctly, which is quite a miracle, but right. So they've recorded the fixed asset, the depreciation on that new plant, on that new machine. They have recorded that correctly. So that's fantastic. Right. The next item that has a reconciling difference is then in the accumulated depreciation for furniture and fittings. So I'm going to again go to the detail on my general ledger. I'll scroll down, or you can look for the accumulated depreciation. Now, for this is the motor vehicles. Okay, so this is this 502020. Now, what do you notice? I want to give you a moment to see if you can notice anything that could indicate the difference here for the reconciling item for motor vehicles, 5020. And you're welcome to even just submit a question if that's what you want. I'll see them coming through. I know it's going to look a bit funny, but just to let me know if you know what makes up the difference between the fixed asset register cost and the general ledger's sorry, not fixed asset register cost, the accumulated depreciation recorded in the fixed asset register versus the accumulated depreciation in the general ledger. Why is there a difference? Look at the detail recorded in the motor vehicles accumulated depreciation and see if you can see why or what makes up that difference of 5,020 Rand and 20 cents. What do you think happened here or didn't happen? What did the accountant do wrong that we now have this reconciling item for motor vehicles accumulated depreciation? I'm seeing some points coming in. Oh, someone's stuck with a 1.3 million. Okay, let's go back to the 1.3 million. Thank you for asking. Right, so 1.3 million, this was the account that we had to reconcile. So if I looked at the general ledger here, in the perfect world, you would have a general ledger with a detail of the items that have been recorded as cost, and you can then go and tick off. Let's say here you maybe had plant and machinery, and you had item 1, whatever machine that would have been, and you would have had a cost, and you had item 2, and you would have had another machine. Oh, goodness, my typing today. And you would have had another cost. And all of those costs would have had to make up the value that comes to 56, etc. Those, all of them would have come to 56. Okay. And then you would have gone and you would have ticked off, or you could even, I've got this little shortcut here for myself to strike through, to say, strike through, I've got that machine, that goes in to this one, for example. Strike through, I've got that one. Strike through, I've got that one, and so forth. And then you would have landed up with all of these items being struck through in the fixed asset register, but on this side, you would not have struck through the 1.3 million sharp machine yet because the client never recorded it in the fixed asset register. So you can see that they did actually record for it in the general ledger, in the accounting records, but not in the fixed asset register. So what we will do then is we'll say it is in the general ledger, it is not in the fixed asset register. So in order to get the fixed asset register value correct, they still need to add the 1.3 million. They still need to record the purchase, the addition of the Hudson Sharp bag machine in the fixed asset register because it was bought. We will obviously go and see that it is actually in the factory, all of that, it is there, but it is not recorded in the client's fixed asset register. Okay. Right. Why would that be the case? Maybe just a thought. So what actually happens is that the client probably, if I look here, the client probably records the fixed assets in the fixed asset register from the cash book as they buy items in cash. But when they buy something on credit, possibly through a lease, so that's then processed through a general journal, they did not think to go and update the fixed asset register. Right? That's probably what happened there. So the cash book payments, they were all recorded in the fixed asset register, but not the lease agreement that they made for the Sharp bag machine. And so the client still has to go update that. That explains the difference for the plant and machinery. Right. Thank you for all of these answers that's come through for the... Oh, I see someone's teaching me something. Where is this person? Lisa Marie, I hope you're not embarrassed that I mentioned your name. Control 5 is the shortcut for strike through. I'm going to test this now. Control 5. Probably. Ah, I love it. Thank you very much. I love it. Touch type is the best skill you can have for yourself. And second best is knowing your shortcuts because the combination will save you hours. So thank you, Lisa Marie. You're never too old to learn, and I learned something today. I appreciate it. All right, so the depreciation expense for motor vehicles, there we had that difference, 5020. And if we go to motor vehicles accumulated depreciation, a lot of you very correctly recorded and identified and said only 11 months of the accumulated depreciation was accounted for. The client did not process the last month, the April depreciation expense in the fixed asset register. So that's exactly it. Thank you very much. So again, what would the client have to go and do? Oh my goodness, I'm not going to mess that up. They have to go and record additional depreciation for that last month, and then we won't have any difference at all at the end of the day. All right. The last one, furniture and fittings. What is the difference there? What is causing the difference there? This is furniture and fittings. If we go and look at the accumulated depreciation for furniture and fittings, what could possibly be the difference there? So we can see a 40537 and 72 cents. Any idea as to what went wrong there? So the one question that I have here, maybe as a thought, is it's one thing to say, well, there's something that is not recorded in the fixed asset register, but it is in the general ledger. But what if something is in the fixed asset register, but not in the general ledger account? So I see, for example, an item recorded as an addition to fixed assets, motor vehicles, furniture, fittings, office equipment, but I don't see that in the relevant or accompanying account in the general ledger account for fixed assets for the furniture and fittings. Well, that is then basically one of two things. One, either they've recorded stuff in the fixed asset register that was just never, ever, ever there, or they reclassified that item as expenses. They never actually showed it as capital, and therefore when they purchased, let's say they purchased a new computer mouse, okay, let's say that was it, they just expensed that item immediately. They didn't record it in the fixed asset register as a capital item and then depreciated it. They just wrote it off as a, let's call it like a consumable type of expense. All right, so that could be the indication as well, that it's just classified as an expense and then therefore probably needs to either come out of the fixed asset register, or if we have a fixed asset register that also shows capital items expense in the first year, yes, then that will then be recorded under that line. Good. So that just to address the question. I see a number of responses. Thank you very much for all of these responses. Correctly, all of the depreciation that was accounted for in this year in the general ledger for furniture and fittings, that accounts to 4,053 Rand and 72 cents. And that's exactly the difference that we have. So the client did not record any of the depreciation during the year. They did not record any of that in the fixed asset register. So yes, correctly, the moment I then actually show that accounting there, then I come back to a reconciled balance. Fantastic. So that was our first exercise. And while I just give everybody a chance to just process that and see that they're going through with that, you can go and open or download then the 2 line items or 2 documents for investments. And then we will shortly go and work through that as well. Right, I don't see any questions coming through for the about the example that we just. I'm going to move towards the next exercise then from our side as well. Let's open then the extract for the investment account. Close these 2 accounts. Open the investment account. Open the investment account statement also. So you'll see the one is Excel sheet again, the general ledger extract, and the one is an Adobe extract, PDF rather, that shows the investment statement. Okay, and again, using my Windows left, Windows right, and selecting the relevant items, I split my screen so that I can see both of them and show you quite comfortably. Right. Good. So what are we seeing here? You can either then, it'll probably make most sense for us to have documented now in Excel, but it is possible also that you're going to actually include the investment statement in your working papers and therefore document your information on the PDF, right? I'm not going to right now tell you how to do that in the PDF. We've got that in the recording as well. I rather want us to focus on the fact that, is this balancing? So in other words, does our GL account for the investment account, does the balance in the closing statement agree to the investment statement from this company? So hopefully you can already see that. So we'll say closing balance per GL, and there again, I'm just using the formula for now, and then closing balance per statement. And here we can again say, well, let's go and have the amount, type the amount, copy the amount, something like that. Or I can have closing balance per statement calculated. Ooh, where is my typing skills today? I was talking about touch type, and I'm struggling to touch type properly. So what I can do in this case is I can simply say, well, if I have the balance from the general ledger and the reconciling items all together, then that should make up the closing balance that is in the statement. Okay, so it's a slightly different approach. So, and then I can say closing balance per statement actual, and that is then the 123,355.63. Of course, then we need to document or calculate the difference, which is then 1,534 Rand. Let me just make all of this numbers. So you can either do rands or I just do decimal to make sure it all shows as numbers. Okay, money numbers. Right, now we'll go and tick, tick, tick each of these. So let's have a look then at the statement. What do we see in the statement? We see, okay, there's definitely a lot less items in the PDF statement. You see there's only a few line items, but in Excel, there are a lot of items. Okay, so that's the first thing. Now, what I was wondering is, did you notice that this is now, well, obviously in date order, that's how the GL is accounted for, right? And this one is also showing dates, and it starts with an opening balance of 31 January. So what does the balance or the statement in the GL start with? Well, that was already in May. So let's see if we can have the same balance in 31 January. So 31 January on this, there's a transaction still going through that starts with 81. And then we've got 31 January, 91,821 Rand and 16 cents. So this is, I feel like, jumping for joy because we have now agreed basically everything up to that point we know agrees between the two statements. The amounts are the same. So what is then the difference between the remainder in our general ledger and the remainder in our statement? Let's have a look. So in my statement, oh, I'm working on the wrong screen. Sorry, guys. In my statement, or general ledger rather, I have three instances of investment debit orders of 10,000 Rand that was transferred into that account. I have 1, 2, 3 transfers of 10,000 Rand into that account. So in terms of our strike-throughs, I love it, Lisa Marie. So Control 5 for my 3 10,000 Rands. So what do we see? I then therefore have actually recorded all of the items in my general ledger, which you might say, well, obviously that's the case because I can clearly see that that's the smaller amount. So obviously the difference needs to be in the statement, but it's not always the case. Sometimes the difference in the statement is bigger and then actually the one in the statement deducts from it. So you've got to check both sides. The differences could lie on both or either of these two. Good. So that's then, first of all, the 10,000s. And you can probably then just put a line through this as well so that you know that you've got your 10,000 sorted out. And so the difference then is really in those three items. And I'm just going to quickly type up the differences. 45911. What is the other one? 51140 and 56396. Okay. And once I've included those three instances, which is essentially the interest that's been recorded in the statement from the bank, but not recorded in the investment account. Those are the three items that make up the balance, and that helps us to reconcile it. Okay. Good. So that is the 3 items then that we use to reconcile, and we've now identified what is the difference. Why is our general ledger not agreeing to the investment statement? It's those 3 items, and then you can now go and say interest earned on, what is it, 28/2/2023, etc., and that has reconciled it. So the purpose for these 2 exercises was to show you, to help you to understand how to do reconciliations. In auditing the reconciliation, that we will go and have a look at in the recorded sessions for the next series. So there are quite a number of reconciliations, also a bit more difficult reconciliations, especially when we get to employee cost. So please, this is not just to bore you or anything. I wanted to start simple with reconciliation so that we can get to the more advanced ones. There's lots of reconciliations in those 3 sessions, so you can definitely go and practice a bit more complex or complicated reconciliations. Right, so that is that for us for now, and now we are going back to our slides, to our material. All right. As you are still preparing for your next sessions, remember your past, remember what you would have learned up to this point. So if you have not yet completed the recordings from the sessions for the first round, please go and watch the sessions. I would definitely prioritize inventory counts for your first inventory count attendances. Secondly, then the introduction session, because it helps you with things like the tick marks, the legends, the referencing, those things. You will be doing working papers in the next round of recordings, and we will also be doing them next time when we have our live session on the 7th of March. So don't forget what was done in the first round. Right. Then further, we are going to now move on to the recap of the methodologies. And with that, very soon we're going to take a 5-minute comfort break. I'll explain just how we're going to do that. So in terms of methodologies, that we've spoken already about Probe, and we've spoken about Audit International and those things. But what are they? Where do they come from? So an audit methodology, or a methodology, it's really just, it's a way of doing something. So the audit methodologies are basically coming from the principle of saying the international standards on auditing are principle-based. They are principles. Yes, they're requirements also, but they are principles. And it doesn't always tell you how to implement those requirements, those principles. But a firm decides how it will then implement those. How will I achieve the outcome of the standard? How will I apply this requirement? How will I show that I have applied this requirement? And the audit methodology is then the way in which the firm applies these standards, the way in which the firm meets those requirements and shows that they've actually achieved the outcomes from the standard. So that's the methodology. And we have 2 of those methodologies that we have, that you could possibly have within the caseware working paper scenario. And so we've got Audit International, which has that little tick mark type of icon, and then the Probe Audit Premium icon that is on the right-hand side. All right, so what's going to happen now? It's just gone almost 20, well, just after 20 past 11. So what's going to happen now is that if you have Audit International, you are going to stay in this session, and I am going to hand over to Samu. Samu is our Audit International specialist, and she's going to take you through the audit methodology as a quick recap to say, what is it that, based on what we've learned today, what are you going to see in Audit International?